Welcome to Kaizen Time, part of the Blood, Sweat, and Business podcast, where we provide constant improvement to businesses through timely, actionable financial solutions. Do you want answers to your financial questions? Email us at bsp@kaizencpas.com. I'm your host, Mark Valesky. Now let's get started. Welcome to another episode of Kaizen Time. I am joined by Henry Jorn, Director of Tax and Accounting. Henry, you have a life cycle, just like everyone else on this planet, correct?
Correct.
You are born, you grow, eventually you kind of start shrinking, and then you pass away, right? That's the end.
Sometimes.
What do you mean sometimes?
Sometimes you get bigger.
Are you saying you're the exception? You don't shrink. You've only gotten bigger.
Definitely gone the other way.
You have yet to.
Life cycle.
Henry has yet to shrink. Okay. You haven't hit that part in your cycle.
I have yet to shrink. Correct.
Okay. Business owners go through the same thing in many ways. We're going to focus specifically on auto shops in a bit, but I do want to talk about this as a whole, right? So, in a general situation. I'm going to go pretty vague. Most people who start a business are good at said business. They do that thing, that task.
Correct.
Whether it's auto repair, whether it's cooking, insert specialty, they just do it, whether they do it for someone else or they just do it. And then they say, I can make this into a business. I can do this myself. They grow it, whether it's in their house or whatever. Eventually, it kind of can grow and become its own entity. And that's where things really kind of kick off. But eventually, whether you grow that business, whether it shrinks, whether the economy changes, whatever, eventually that business needs to either it'll end or goes to somebody else.
Correct.
Right? So I want to talk about kind of the life cycle of a business. So let's get into that.
All right. So most of the time, as you kind of alluded to, somebody's either are good at something, they really like it, or both, right? And because you could, like people that run failed businesses, right? Generally, they really like something, but they're actually not any good at it.
Like the actual skill or running the business?
The actual skill.
Okay.
So, they get started and, maybe they are the talent, right? They do all the work. Whether it's a person that's a carpenter, right? Doing that on their own, helping to build houses or whatever. Or it's an auto shop mechanic. They, either have a garage or doing it out of their home, fixing cars. And at some point, they may say, hey, I've been doing this by myself for a little while. Maybe I'll hire somebody. So they go and, maybe they got a friend that they chit-chat about fixing cars with, et cetera, et cetera. Hire that person. Now you got two people. Now maybe you need a place now to do it if it's at your house, right? Because you need more bays. So now you have to go and you're like, man, how am I going to pay for this? And maybe you're a Schedule C, so you don't really even have real books or anything quite yet. So a lot of times you'll probably go and chase down a loan to open your first shop. It could be, funded from your personal equity. It could be expensive debt that you have to get because you really don't have books or anything. But at that point, you should start thinking about, hey, I'm going to formalize my business. Maybe you get a QuickBooks file or whatever accounting system you decide to invest in, and you get going on that, and maybe you think about, hey, we should have a better way than QuickBooks or Excel or whatever you're using to kind of manage the events that essentially happen in your business that generate revenue and payroll and all those things. So maybe you'll get like a POS system or something. then maybe you hire your next employee, and maybe you get one more, and then you're like, hey, you know, like I can't handle all this back office stuff anymore on my own. I'm going to get an office manager or, you know, secretary used to be the word. People don't like that word anymore because it's considered derogatory sometimes. But I don't know how like the Secretary of State would feel about that comment.
I want to ask you, as we kind of focus on some of these states that a person is in, what should they be as far as a business entity for any given one of these? So, for example, hey, I'm just doing this out of my house for fun. They may not even be an entity. They could just be getting paid cash, right? Hey, I work on some stuff.
So like legally, you should still be reporting that income to the government.
You totally should.
And tracking it somehow, taking your expenses. So generally, like that guy might be a Schedule C.
Okay.
Which is not a separate entity. The issue there is, and I'm not an attorney, so I can't, you know, give legal advice, but you personally are liable for when things go wrong.
So even if you're just taking it for cash and you just did your buddy's car, something happens, that's on you.
So,
you did the work.
You know, even when you're that small, you do have benefits to, you know, get a single member LLC started. You know, it still gets reported tax-wise the same way, but now you have a level of legal protection to your personal assets. As you grow, you know, and maybe you get a partner or, you know, whatever, there's a decision point like whether you should go and be a partnership or you should be a S corp. So if your primary motive is to save taxes and you don't really need a lot of flexibility in your ownership structure or how profits are distributed or any of those things, then S corp is a good way to go. If you want some flexibility, you have plans to bring partners down the road into your business, you know, maybe you have profits that you don't want to allocate based on everyone's partner allocations and determined, you know, on an annual basis. Maybe you want to do a partnership.
So we have a shop. It's in its mature phase. It has grown to the...
It's probably an S-corp.
The largest it is going to be. Not largest it's going to be. They can always grow more.
Sure.
What does that look like from a business owner's standpoint? Because eventually they can't manage everything.
Yeah, so a single shop that's super large, so you're probably looking at 5 to 10 million in sales coming out of that shop. You know, you probably have someone doing like your day-to-day bookkeeping. You've got a shop management system. One thing that we've talked a lot about on our end, so a corporation, right? Like IBM. I always like to say IBM because it's such a old company that like nobody talks about anymore.
It's not as popular as it used to be. That's for sure. Yeah.
All right. Well, all jokes aside, we'll talk about Amazon, right?
Okay.
Amazon has, you know, tens of thousands of people that it employs. So they have all those minds to kind of draw and generate ideas throughout the organization. Mm-hmm. When you're a single auto shop owner, how many people, or like you only got a few people or whatever, you know, maybe you got 20 people if you're one of these mature large locations, 20, 30 people in total in your organization. Where do you get other new ideas from?
Probably coaches. That's where I'd have to go.
That's exactly where I was going with that. At some point, as you kind of get employees and you kind of are migrating into being a business owner, our recommendation is that you should get a coach in your
field
segment.
Yeah.
You know, worst case scenario, generally coaches will bring you into groups where you guys are communicating with other auto shop owners or other business owners if it's a different segment, and sharing ideas like, hey, this worked for me, you should do this. Because those new ideas are really like what's going to move your business forward and get that competitive advantage over other auto shops.
At this point, this more kind of, I don't want to say mature point, but when your business kind of is, I don't want to say flatlining, but you want it to grow and it's not. This is the part where I'd say get your coaches and also go to a trade show.
Sure.
Trade shows are where you can really move the needle, find people who are also trying to advance themselves in the industry. And you're going to find vendors who can really help you improve your processes. Because, again, you may be doing some real simple stuff. If it's just maybe you and another person, stick it all into QuickBooks because you're not doing that much business that you need to keep track of. But eventually, if you want your business to grow, it can become difficult to manage all those things. And that's
manually especially.
And that's where you need the assistance of the coaches and other people within the industry.
Other people in the industry, software, shop management system, for example, or like if you're an electrician, maybe you have job cost software, all those sorts of things.
Perfect. Anything else you want to add, Henry?
No, not on this one.
All right. Thanks so much. You've been listening to Kaizen Time, part of the Blood, Sweat, and Business podcast. If you like what you heard, subscribe and leave a 5-star review. This podcast has been brought to you by Kaizen CPAs Plus Advisors, providing advisory and accounting services to help you grow your business. Learn more at kaizencpas.com or email us at bsb@kaizencpas.com.